This conference will now be recorded.
All right, good morning, everybody. It is Sunday, January 1st, 2023. So happy New Year. This is the weekend video update for Canslim Growth Stock Investors, brought to you by the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As always, this is for educational purposes only, certainly not recommending any stocks or securities to buy or sell, and all investing has substantial risk of big losses. So we want to make sure we learn first and only then invest. And Canslim's registered trademark, of course, of Investors Business Daily. So as normal, we're going to look at the Impactor since that's the most important letter in Canslim. We'll sort of review the current market. What do we see? Is it constructive? Is it destructive? Are we seeing accumulation or distribution? Are we seeing stocks setting up or an ongoing chop fest or even a continuing downtrend? Because we have three options. Action plan currently, including some things to actually be doing now. And then our next regular monthly meeting will be January 18th, 2023. So the Impactor. So O'Neill stresses have been very important this year to just diagnose, to interpret, don't ever predict. And we look at three things to determine the market direction in Canslim in this order of priority. So the action of leading stocks, very poor right now. We don't even really have a lot of leaders. Got a few stocks struggling to stay on Survivor Island, particularly in the growth stock arena. Actions of stocks owned. Well, in the group teaching portfolio, we've got one tiny baby long left. That's it. Everything else is cash with a short or two. And then market pulse, distribution day count, price and volume on the indexes, all of which I incorporate into the coloring book for the things I want to look at on market direction. And of course, we're going to see lots of Rudolph nose red as IBD this week even killed the yellow canary and flipped to red along with everybody else, or market incorrection as they call it. So let's hop out of here, look at the index charts, coloring book, the group teaching portfolio, exit this. Let me find it. Here we go. So here's where we are currently, just to kind of walk across the pages. 25-day window goes back to the orange dot. So the first thing we see is we only have 5 buying days and 12 selling days within this 25-day window. And then across 6 indexes, the MMTS signal is red. IBD, as I said, flipped to red this week in correction. The market school exposure model is still at 0. Steve Sweat's window of opportunity is closed. And then on the NASDAQ, new lows are exceeding new highs. We had 2 days on the NYSE, or yeah, I think Matt checks the NYSE, where new highs did exceed new lows. So that's about the only thing that was just showing a little bit of life there. We still have a high distribution day count. We have 6 on the NASDAQ. We had clustering 2 days in a row. That's 4 distribution days in an 8-day trading window. On the S&P 500, we also got clustering. So those are heavy counts with clustering, which is kind of distribution on steroids. We have 6 on the Dow. And these are colored white because I flip them to white when IBD stops counting. When it goes into correction, they don't count anymore. I still count because I always like to know what the distribution day is count is, just to see if we have clustering, just to have a handle on that. And then still next week, we still have a lot of data coming up. And then we start with the Fed speakers again on Thursday and Friday. So they just can't let it go. And then the other thing, the next Fed meeting starts January 31st. So we'll have Fed results on February 2nd. And we also have Fed minutes this week at 2 p.m. In fact, the gray blocks show you Fed meeting is dark gray. Fed minutes are light gray. So we get hit from the Fed every 3 weeks, or potential hit from the Fed every 3 weeks. So just not positive there. It's kind of pretty easy to read, quite frankly, just lots of red. Also, if you go down through here, you see we haven't had any breakouts, hardly at all. They'll be showed in bold. Yeah, Caterpillar broke out there. Maybe an early entry on MedPace, but the slope and trend line break, but the market's in correction and there's just too much red. So I did not take that entry at all. But that's just other ways to confirm what we are seeing. And then if we jump over to the index charts, so here's the NASDAQ on a daily basis. We're back below all moving average lines. This is 35% off the peak, that red line. So we're back to being well off the peak. Um, again, moving average lines are going in the wrong direction. I mean, the 50, maybe it's turning back down, but just the 10, 21, 50, 200, everything in the wrong order. Nothing good again there. Same thing on the S&P 500. No, it's not as far off. You see it's, 22% or something off its peak. NYSE, this one is above the 50 and the 200 and battling at the 10 and 21. So that's a little more constructive there. Dow, sort of similar, trying to get back above. It's been the stronger index all year, which is not really in our favor. Russell, again, moving averages in the wrong order and basically below all of them, just creeping back above the 10-day. S&P 600 looks same, fighting down at the 10-day. If we go back to the NASDAQ, always helpful to have our weekly perspective. So here's where we are. We're actually 13 months into this bear market. So by normal standards, it's getting long in the tooth. So that's a good thing. Hopefully we're closer to the end than to the beginning. Pretty clearly, in my opinion, we're working on a fourth leg down. We may not get it, may turn around without doing it. But if we run into some capitulation selling, some more declines, and then capitulation selling in month, 2 month, 3 months, we may see that fourth leg down. So pretty significant. It's always worth going back. Let's go back and look at the .com /1-2003 bear. So this was the really nasty one. I think the NASDAQ was off. So 78%, 76% off the peak. So this one lasted a couple years. It had actually have at least 6 legs down before it came out, just cascading selling here at the end. And then this final little bit where maybe we did see some capitulation, really didn't undercut the third leg down by that much, but it did still undercut. So that one went on for a while. And of course, the other one was the financial crisis bear. So here it is. So it was a 56% drop basically on the NASDAQ. And it lasted 16 months. So again, our current bear in January will hit 13 months. So, and it had pretty clear 3 legs down. And again, the last leg sort of barely undercut, but it looks like we're getting maybe additional legs down at this point. And you can even see really here was the bottom on the RS line, but it still chopped around, went down, shook everybody out one final time before we started going back up. So go back and study those precedents. Those are good to pay attention to. We did have a fall 2018 bear. I mean, this one was a baby bear. It was only down 24% and only took about 3.75 months. And so that was 4 years ago, actually, and ended with the sort of the Christmas Eve massacre, as a lot of people refer to it. And then we got a follow-through day on April 6th. Oh, we did have, I didn't point out on the coloring book, so we did have rally days on all 3 indexes last Thursday. So we could have a follow-through day as soon as day 4, which would be markets close Monday, so it'd be Wednesday. But again, we just don't have stocks setting up. That's really what's missing right now. And then the group teaching portfolio. So mostly cash, only 11.6% invested, and all that's really on the short side with some puts in Fryer Battery and a little pilot put position in PCVX, and then have a little bit of the long position left in CPRX, but pretty small. That's a 15% of a normal size position. So market's still pretty bad. Finished up the year down 11.8%. A lot less than what we looked at on the NASDAQ and the indexes, but still not a good year for sure. All right, let's go back over here. So we looked at that. Current market thoughts, Fed talking heads, they're just so strong on inflation, and Powell is too. Nothing else matters. They don't care about the market. They don't care about anything else. So that's an ongoing overhang. Quantitative tightening on the balance sheet is being implemented. They're kind of caught up from the goals that they set when they first started it back in June, and there's no end time on that. It's supposed to be 60 billion a month on the balance sheet, and then I think it's 35 billion a month on mortgage-backed securities. They're lagging a little bit on the mortgage-backed securities. Still got that war going on. Um, Recession is not, quote, officially called by the talking heads, but the yield curve inversion for a long time now and the strong inflation sort of lets us know the truth. I mean, in fact, when they finally call a recession in a couple months, probably will be when the market is turning because it's going to be looking 6 months ahead. And then we got a 13-month-old bear market. So current market view, all the MMTS are red. I showed you that. The window of opportunities closed. IBD killed canary yellow, flipped to red this week. Distribution days piling up like I talked about. Really, the selling day count's just crushing that buy day count. So Mark Minervini looks at that. He calls it a distribution dominant tape. When we see that, and new lows each day are still outweighing new highs. If we're in a good uptrend, it's very logical, as Matt Caruso talks about, we ought to see more new highs than new lows if the market's doing good. And then we're working on those potential fourth legs down that I showed you. So current market signs or signal or interpretation for me, still a bunch of stop signs, a lot of red, just like on this slide, as I threw in last weekend, what kill you will make you stronger, except bears. Bears will kill you. So seriously, don't feed the bear. Don't feed the bear your fiscal capital, and surely don't feed the bear your mental capital. I mean, the bear took a lot of mental capital out of investors in 2022. The M's still wrong for right now. It could change. I'm not saying it's going to be that way for 1, 2, 3 months because I have no idea. Although there's a lot of people that are willing right now to predict what's going to happen over the whole next year, and not a single one of them knows. I'm at least honest enough to say I do not know. We're going to do this one day at a time, the way Bill taught us. So bright side, market's terrible now. It's not even really a tricky sideways market. Sideways is the most difficult market. It's a clear downtrend. Trading plan is easy until things improve. Just don't do it. Ask the right question. Can I objectively identify a change in trend presenting a low risk opportunity to start getting back in or start wading back in? How does one do this? Study, understand the M. Correct question or questions. Has there been a valid follow through day? Or has the window of opportunity signal opened? Has that gone back green? Or maybe both of these happen about the same time. That's even more constructive. Has the Fed pivoted? Is the buying day count getting higher than the selling day count? Is there a trend of new highs exceeding new lows? Or are the indexes constructive in light of the moving average lines? Or have we retaken those? Are the lines trending up? Or are they in the correct order? And most importantly, we need one or more of these six, and we have to have number seven. Do we see top-notch fundamental Canslim stocks set up in full and proper bases and breaking out? Our experienced Canslim investors, again, the early entries are fine as long as you've got some of this 1 through 6 in your back pocket, and take an early alternative entry that's given to you per your rules. And you can look at Bill's trades and those 70 charts and articles he gave us to study. So have an action plan, even if that's not a trading plan. So there's always things we ought to be doing. It's a great time to study and read. Plenty of book recommendations out there. I'm finishing up a book called In the Fed by Ron Paul that Matt Caruso had recommended. I don't think they're going to end the Fed. I'm not being delusional, but very interesting book. Explains the history of the Fed, where it came from, how much power is really concentrated in that small group of people. So again, that was End the Fed, END, by Ron Paul. So it's an older book. Stay in touch with the market. That's the daily, your weekend routine. Watching videos from me or whoever that helps you kind of cover things to stay in touch. Look at the coloring book each day on Twitter. do your chart work every weekend to prepare a watch list. So that's going through the Market Smith Growth 250, the targeted list, the newspaper, the list in the newspaper. And surely you ought to be working on your post analysis for 2022. What's your best trade? What's your worst trade? What are the areas you need to improve? So again, there's plenty to do. Post analysis that I just talked about. What was your biggest trading mistake in 2022? I'll give you a potential list. Not having written sell rules. That's a biggie. You should fix that. Not cutting all losses short. They're called stop losses for a reason because it stops the losses. And we see how that doesn't work with SFX and Almeida, and even Kathy Wood and ARC, because it just keeps piling in and averaging down. Um, Not having a weekend routine, that's a mistake. Not keeping good records, that's a mistake. Buying at incorrect points on the chart. There was a article in the paper about Mark Minervini losing money year after year, and just sitting down and figuring out that he was buying extended stocks. In fact, David Ryan made the same mistake and has talked about that at the beginning of his career. So the strong positive thought, the worse it gets to the downside, the better it's going to be to the upside when it gets here. And if we can get that capitulation and everybody just feels like they have been kicked in the teeth by the horse, they're done. People are saying, I'm out of this market. The 401k is a 101k. When all that happens, when we get that capitulation, the VIX spiking, the put call spiking, some of those extreme signals, well, that's the time to be ready. And that's why you got to have your mental capital ready. So earnings season starts soon. I'll kick off in a couple weeks. And of course, this is the longest one of the year. It's going to be 3 months for the annual reports, and then we start another month and a half right on top of that for the first quarter of 2023. So we've got 5.5 months of earnings seasons getting ready to launch. So that's a good place to hunt for buyable gap ups. Again, if we can get the M to improve, our monthly online meeting, next one will be Wednesday, January 18th, 2022. You can register at the Stockyard Meetup site unless you signed up for the October meeting. That was the one that I canceled due to our family situation. And so I will automatically send everybody who signed up and paid for October links to get into the January 18th meeting. But otherwise, you can sign up, includes live attendance, recording, slide deck, links to any articles that I talk about. And if you're a first-time registrant, I send you a copy of the most recent monthly meeting, which would be back in September. The agenda, so we'll look at the Impactor like we always do. We'll do many teaching segments on Canslim nuggets, things that have come up from O'Neill, IBD Live, podcast I've listened to, Matt Crusoe, any other sources. Market Smith tips and tricks if there's anything new. We'll look at some stock list just to flip through these. We'll probably see that the IPO market's still dead. That's something else that will change when the trend changes. It'll come back. Go into detail on Fryer Battery and why I thought that was a good short candidate and why it's in there in the group teaching portfolio with using put options. Look at the group teaching portfolio, talk about some stuff from 2022. IPO market, always have that on the agenda, but that'll be very fast. Just rest in peace now still. And then we'll do open mic Q&A. I'll pull up charts, whatever y'all want to look at. Prior meetings are out there. I talked about if you don't have written sell rules, I spent 3 meetings covering that. It was so important. So these can be ordered. The prior meetings are $15 each. Those 3 have to be ordered together. And then also, if you don't have a weekend routine, September 21, October 21, I did 2 meetings on that. So I can send you that list. So the meetup sites again, Greenville Eastside IBD meetup, that's the official one with IBD. Stockyard meetup site is the one I do separately to coordinate the online meetings. You can email me if you need information on ordering prior webinars. You can follow me on Twitter, see the coloring book each day and keep up with market direction. And then, of course, my YouTube page you are on. So please like and subscribe there. There's a teaching video on the group teaching portfolio. I've made that spreadsheet available so you can do your own. I mean, what a great time to do that. If you're mostly cash, get that thing set up and use it if you don't have a good if you're not keeping good records, and that's also set up to help you with your post analysis. And there's videos on there on the 8-week hold rule, which is really an exception to the rule. Our full meeting for May of 2021 is on there, just so you can see a sample meeting. So that's it. Hope everybody has a great day, good New Year's holiday. Hope we all have a new year, and we do hopefully see some improvement down the road this year. And that's it. I'm out of here.